Hey guys, welcome back to another episode. Today I'm going to do a portfolio update. I finally hit a milestone of over $150,000 account for now, right? Market is super volatile, so that can change over time. But I'm going to share my simple steps that I have done to get over $60,000 in pure gains. So let's get started. If this is your first time here, guys, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment where I have 10 free stock ideas, and I also have my free newsletter where I share my overall position and every stock that I follow right now. I have a nice presentation on them. All right, so portfolio update. This is November 13th of 2021. So like I mentioned, account has reached new levels of 150,000. Here you guys can see a perfect timestamp. I try to be as transparent as I can. And right now I have over $60,000 of pure gains. So here you can see another timestamp of that. So let me just share my overall investing mindset. First, long-term investing. And I want to say these are the main 3 points that have helped me build this portfolio and see these types of gains. Long-term investing. When I invest money into my account, this is for multiple year time frame, right? It's not something that I expect to happen overnight. And I'm going to show the history of this portfolio in a bit, and you guys can see how it grew from a few $1,000s to over 6 figures now. I also understand, right, investing in long-term investing, not all of my positions will win. Some of my positions will be losers, and that's important to know because sometimes I feel investors worry so much about their losers, and it's just like, hey, that happens in the game, right? You're not gonna have a winner every single time. The second thing is I deposit weekly, right? I put money to work on my account on a weekly basis. I'm by no means anyone loaded, so I like many of you, I only put a few $100s per week in the market, as that's all I can do. One thing I do try to do is reduce expenses, and when I do reduce expenses, try to invest more. Maybe let's say, hey, I have some form of loan I want to pay, a student loan. Once I'm finished with that student loan, I was already using that money to pay something. So instead of using it for myself and something that I could care less about, or something that would just give me short-term returns, why not use that extra money to invest more? So deposit weekly and try to find ways to increase that weekly investment. The final important point I want to say is I invest in markets I understand. I come from education in engineering, mainly technology, right? So gaming, data centers, tech components, cloud security, semiconductors, right? That's a huge one for me. Consumer products, e-commerce, fintech. Those are markets I understand both in technology and how the consumers want to kind of get into those products, right? You won't see me talking about companies in the pharma material. You won't see pharma companies in my portfolio, maybe in an ETF, but not as an individual. You also won't see things like materials, energy, stuff that I don't understand. You won't see me invest. So now portfolio breakdown. So I believe, and this is pretty weird, I'm a mixture of a concentrated portfolio and a diversified portfolio. You'll be like, Jose, how can you do that? So I invest heavy in my top picks. High convictions get high money. So my top 3 accounts make 31% of my portfolio. My top 5 accounts make 44%. My top 10 positions make up 62% of my overall portfolio. So you can see my top 3 all are on average over 10% each. So I like those 3. Those are ones I want to continue to invest and continue to make bigger. I don't mind if they're a big position in my portfolio. Top 5, almost 50% of my portfolio. My top 25 positions make up 86% of my portfolio. So my top 25 position pretty much move my account. But at the same time, I also enjoy the investing games. I like finding new companies. So sometimes I don't even mind investing a small amount in other companies. And so my portfolio has over 50 positions. It has about 57, I believe, or 54. And it's over 50. And 29 of those positions after top 25 are roughly 14%. So you might be like, Jose, how do you cover 50 something positions? Well, I just showed you that 29 positions account for 14%. So in theory, I don't need to check those positions every quarter or even every month, right? Because they're such a small position. Sometimes I could just ignore them, wait for the market to react to tell me how they're doing. But I really do focus, for example, on those top 10. Those top 10 make up 62%. So taking care of 10 positions and understanding those 10 positions very well is easy to do, right? Even though I have over 50 positions, 10 make up 62%. So I focus on those 10. And that's a great method because I feel like some people hear 50 something position and they'll be like, how can you cover that many? Well, the market count, your portfolio tells you which positions are important depending on how much they own. And another thing, I believe that even a small position can provide crazy returns. And this is my perfect example, Celsius. Celsius is a company right now that I invested only about, I want to say $800 in it. That $800 has turned to almost $6,000. So even a small position can provide crazy returns. That's why I like to invest even a small amount into numerous companies, right? Because one of those can provide crazy returns that can do amazing. Because of this, Celsius, one of my smallest positions, has become one of my highest winners in my portfolio. So now let's take a quick look at my portfolio update. Like I mentioned, I have a lot of accounts, but my top 5 are right here. NVIDIA number 1, Unity number 2, NVIDIA about 11.7%, Unity 10.3%, AMD 9.27, C Limited 7.85, Cerence 5.4. I think with Microsoft, my top 6 roughly make up 50%. Microsoft will be about 5.3%. So you can see how just those 6 positions are pretty much half of my account. And you can see how all these small positions right here, like I said, this is how I'm able to update and control my portfolio because I don't have to check these accounts every month, right? They're so small. But if they end up being a Celsius, which is right here and used to be right here, that's when I know I should start taking a look at it. And like I said, right, this presentation is for free in the newsletter. Feel free to check out. The comment is down below. So now portfolio update. I just want to show about my positions. Like I mentioned, I have actually 54 positions. 14 of those positions are actually in red, and I have them red here. You guys can see them. I have 14 positions in red. Most of these are actually after my 17th position. So you can see none of my top 15 are in the red right now. And that's what I like to see. The total losses on those 14 positions are about $4,700. Now the greens are my top 5 winners money-wise, right? NVIDIA, Unity, AMD, C, and Celsius. Those are my 5 biggest winners. Those alone make up $39,000 in pure gains. My number 5th winner, just my last winner, has alone over 5,000 gains and can cover all of my losses, right? So that's why the market tells you. The market tells you if you're right and wrong. Most of the time you're going to be wrong, right? 14 positions are bad already, but when you're right and you let those winners ring, that one of those positions can pretty much carry your losses. So I also want to show, right, it's true that just a few positions in your portfolio are portfolio movers, right? My top 5%, my top 5 make up over 66% of my total gains. The real question is which ones? How would I have known that those were going to be the 5 biggest movers in my portfolio? I honestly wouldn't. So some final other things I wanted to take a look at of how I invest so you guys can be in my mindset. Take out emotions. How do I take out emotions? Having multiple positions. Doing due diligence. If I invest in a company, I do some research before investing. It also, doing these due diligence helps me with position sizing. NVIDIA is a company I know so well, I don't mind having a huge position in it. But maybe, for example, Teladoc right here, super small position on my portfolio. I don't mind being in the telemedicine market, but maybe I don't follow Teladoc too much to make it such a huge position in my portfolio. So due diligence tells me, hey, Jose, how much are you willing to put in an account? Finally, buy companies in the following: ones with strong markets, high revenue growth, strong balance sheets, and buy winners. Unity, for example, was one I was buying over and over and has now become my second size position. So now I just want to show you portfolio history, and I also want you to get some information from here. So you can see my first episode, I actually have videos on all these dates. So if you guys wanna fact check me, you guys can go back and check them out. But my first portfolio update was on December 13th of 2019, almost 2 years ago. I only had that's when I first started my YouTube account. My YouTube account eventually became my main account. So there, when I first did that video, I only had gains of $553. 553. Let me bring it down to where I'm at right now. 2 years later, gains of $60,000. Account size then was 16,800. Account size now is 150,000. And that's the power of weekly investing. A few other things I want to show you, right? There were two major downturns in the market. The first was during COVID, which was in right here of March 20, not March, May 27th of 2020 was another portfolio update I did. My account barely grew in gains, but the account size grew dramatically. And the reason is I understand that during red markets, I had to find ways to invest a lot heavier. So I put a lot more money to work. And you can see that ended up working really well, because after that, my next portfolio update was June 10th, and the gains skyrocketed like crazy. Another time that we saw a nice amount of decline was this year, at the beginning of this year of March and February. We can see gains between January and March were non-existent. I actually was down over those 2 months in gains, but my portfolio size gained over $15,000 or 14. That's because I started to add during red markets. And during red markets, I believe is a great time to add and try to find ways to kind of decrease expenses and really invest. And you can see those have really helped me out with my gains, because my few portfolio updates after that have really increased my portfolio dramatically. So I hope you guys enjoyed today's episode. Take care, have a good night, and see you next time.